Hey, good afternoon, risk managers and short-term traders. I wanted to talk on this session a little bit about multiple time frame analysis. Some traders that are not educated only look at one time frame only. They have tunnel vision. They look at the daily or the 60 or the 30 or the 15 or the 5 or the 3 minute, whatever. But I think multiple time frame analysis is super important. You want to see the tide, the ripples, and the waves, or the tide, waves, and ripples, so to speak. So I like the daily higher time frame. I like the 240 4 hour chart, and I go down to a 60. Yes, I'll peek into the 15-minute chart throughout the day, of course, but daily, 4 hour, 60. Draw your supply and demand zones, your support resistance. Draw your trend lines, and then that way you'll see some cooperation. You'll see some confluence, and it's just a much better way to approach the markets, I believe. Multiple time frame analysis, all the good books that talk about trading and how to become consistently successful talk about multiple time frame analysis. So you don't have to do my time frames. You can do 480, 120, and 30. You can pick your own three time frames. But some of you out there are already doing this. You've already learned the right way. Fantastic. But if you're relatively new or you've been struggling and you've never heard about that, it's really important to have three time frames: higher time frame, intermediate, and short. And what I mean by that is, I'll take a trend line break trade, or I'll join an existing trend on the daily. You don't have to go down to a 15 or a 30 for entry and exit. I could put a trade on just off the daily chart. The risk might be a little bit more, but the reward is going to be more as well. Risk is always going to be commensurate with reward. So I can take a trade off the 480 chart. I like the 8 hour chart as well, but you can take a trade off the 4 hour chart, 240-minute entry, stop, target, have multiple targets. You want to have a methodology and a strategy to let winners run. The oldest adage in the book is cut your losses, let your winners run, or cut your losers, let your profits run. We used to say on the floor of the board of trade back in the day in the 90s and 80s, you don't want to eat like a bird and poop like an elephant, right? You want to let your winners run and cut your losses. Most struggling traders do the opposite. They cut their winners and they let their losers run, which is the exact opposite. So if you want to learn more, message me, send me a message, dan@trendlinebreak.com. I got a 5 hour, 2-part masterclass. I got a summer special, including my ebook, and I'll throw in 90 minutes of consulting. And on the 5 hour masterclass is all about trend lines, psychology, risk management, position sizing. Again, I spent 3 years with a very successful hedge fund trader from 2010 to 2013 who took $1 million account to $1 billion in 10 years, Richard Scalone. So anyway, that's today's video. Multiple time for analysis, super, super important. Incorporate it into your own trading. Thanks. See you next time.